Let's talk about the logistics space now. Mahindra Logistics is the stock on our radar, and we have with us the company's management, the demand and the business outlook. Ram Praveen Swaminathan, who's the MD and CEO of the company, joins in. Ram, always a pleasure speaking with you. More so, at a time when we're looking at the future for the logistics industry, and not a lot has happened in the first 9 months of this financial year. I mean, I'm looking at your third quarter numbers as well. The margins compressed even as the revenues grew by about 5%. You have that 10,000 crore revenue target by FY26 as well. So if you could give us a glide path to that, how have things been in the fourth quarter so far? Any early indications that you have for FY25 when it comes to revenue growth and margins?
Good afternoon. I think the quarter has been a bit of the same from last quarter in terms of volume. I think that's been, we have seen some firmness in addition to automotive on FMCG and even on e-commerce, but not a breakout, if you may say so. On the positive side, though, there has been a fair amount of new orders coming in. Therefore, there's clearly a precipitative view in terms of order expansion, right? And that's especially true in our contract logistics business. The other businesses are continuing to grow. Year on year, the margin compression was really the continuing cost of the Express acquisition we did as we kind of focus on scaling up that business. Sans that, I think margins were pretty consistent year on year. And actually, kind of a bit of an uptick.
Okay. So, Mr. Swaminathan, any details that you can share with us in terms of what the costs might look like for y'all in Q4 as compared to what you all encountered in Q3? Because in Q3, your EBITDA was down 17%, your margins were under pressure. Is it better, is it same, or is it worse in Q4?
Yes, I think that there are I think we have multiple businesses, and therefore our contract logistics business, and which is the largest part of the company, around 75% of our revenues, that business and our cross-border logistics business, margins have been fairly consistent on a quarter-on-quarter basis. So we've not seen any downward pressure there. I think the Express business, we will start seeing improvements starting this quarter in terms of margins. That's where we have the biggest challenge for the business from a short-term perspective. And that will start showing improvement from this quarter onwards. The last mile delivery business is a tough pricing environment right now. We are working through that in terms of cost adjustments, but I expect to largely continue to hold to what previous quarter was.
All right. So previous quarter was just under 4%, and you aspire to hold on that one itself. On the Express logistics business itself, you did say that you will invest 50 more crores in the Rivigo business, then the Express vertical, etc. as well. E-commerce is about a fifth of your overall revenue. How is that piece likely to play out, largely because you said it is competitive and tough as well?
So I think the Express business, we have a very small market share overall, and therefore I think while the industry has seen some softness, for us that's not a big carry. We are winning. Last quarter we added 28 new accounts. We are seeing volume throughput come in. In this quarter onwards, we will start seeing the cost side of the business start showing improvements, which has been the big carry on the business. In fact, it's been the carry on the overall Mahindra Logistics consolidated numbers as well. E-commerce has kind of bottomed out for us. We have been launching new sites this quarter. Right, I've expanded fulfillment operations in some geographies across the country, and so I expect that to start, moving positively, in the first half of next financial year.
Okay, what is the kind of growth outlook that you have in the non-Mahindra part of the business? How much is it as a share of revenue? How much do you want to take it to? How aggressive are you in terms of acquiring business there?
Yeah, I think the non-Mahindra part of the business, is approximately 50-52% of revenue, give or take. I mean, it changes and bumps up and down by quarter. And we are expecting that to lead the growth. So if you look at, I think we've laid out an aspiration of being around 10,000 crores over the next few years, and the non-Mahindra growth is going to be a very large part of that story. Over the next 3-4 years, we expect that business, those parts of the business, to probably grow at 2x. The more conventional Mahindra part of the business.
All right. So non-Mahindra business growing at 2x. And what about, Rivigo and Meru? Both of them have, by when do you expect them to break even? And any more inorganic aspirations that you have?
So I think the Meru business, which we acquired, right, that's kind of turned around. I think our mobility business, has achieved break even at a PAT level, and we expect the full year to be positive in that business. That business reflects the full consolidated effect of the Meru acquisition. So we think that's actually a good place. We've kind of scaled that business up and eliminated some of the losses which were there in the business we acquired it. The Rivigo business continues to be in a scale-up mode. Strategically, from a long-term perspective, very valuable for the portfolio. Has expanded our reach very quickly and has probably cut down our kind of a ramp up to grow that business. It will obviously have a few more quarters of carry. We expect we're targeting that we'll be EBITDA break even through the first half of the next financial year, and we will hopefully be PBT positive by the end of the year on a run rate basis.
Okay. All right, Mr. Swaminathan, we're going to let you go on that note. It's been a pleasure. Thank you very much for joining in and speaking with us. So that's Mahindra Logistics. According to them, Q4 has been similar to Q3 in terms of volumes, but the biggest challenge currently is the express division that they're facing at this point in time. We need to take a short break.